Hey guys, Eli here, and yesterday the stock market was in the red. I mean, so red that even the lights wanted to represent how red the market was yesterday. Oh yeah, it was that red. It was extremely, extremely red. So red, as a matter of fact, here's how much money I lost yesterday. Gosh, I can't even look at it. Anyways, on today's video, I want to talk about what happened yesterday. Like, why is the market down? And by the time you're seeing this, maybe the market is up. Comment down below, let me know. And after we go over what happened, exactly what can we do to actually take advantages of red days? And we're starting now. If you guys love content like this, make sure you guys hit that thumbs up, subscribe to the channel, and also leave your thoughts down in the comments below. So let's get right into it. So going right in, we see the Dow Jones down about close to 2%, the Nasdaq about close to 3%, and the S&P 500 about 2.04% in the negative. And if you care about small caps, the Russell 2000 was down about 2.19%. And I mean, honestly, that's not a real major correction, because last week the same thing happened, then the next day it went back up, and then right now we're actually seeing the same amount that we lost last week. I mean, for the stock market to at least be considered to be in a correction or a crash, it has to be down in between 5 to 20%. But if you believe it or not, we're not in ordinary times right now. So what in the hell happened yesterday? What caused the stock market to crash? Okay, I'm over-exaggerated, not crash, well, to go down. What's causing a group of people to say, the stock market is a scam, I'm never putting my money in there again? And the next group of people to say, here we go, come on, push it, buy the dips, buy the dips. Well, the first thing could be Treasury Yields. 10-year Treasury Yields spike as high as 1.5% today, as the sooner than expected Fed's rate hikes start to seem more and more likely. Investors are betting that the Feds are finally going to pull back on the bonds purchases, and that the rate hikes are going to come shortly after. Yields were as low as 1.29% just last week, and 1.13% in August. And a lot of investors are seeing this and just going crazy like, man, my heart can't take all this uncertainty. Oh, I'm losing my retirement. Good thing it can't get any worse. But wait, there's more. Oh gosh, my life. Something else that's causing panic within the stock market can be the government shutdown. Believe it or not, the US government could be out of funds in just 3 days. That means Congress will have to compromise on spending plans very soon, or go into shutdown mode. Democrats and Republicans are conflicted on the debt ceiling. Republicans are hesitant to approve the debt raise because of the inflation fears. But Janet warns that the Treasury could default on American debt for the first time if the ceiling isn't raised. So all this pandemonium is causing people to go crazy as far as the market, taking their money, putting it into cash, and taking it out the markets, which indeed caused the markets to go down. And that's pretty much what's causing the stock market to go down. Huh? There's more? After that? Come on, you gotta be kidding me, come on. The widening trade deficit. There are also concern about the overall health of the American economy. The U.S. trade deficit widened about 0.9% in August near record highs as business stocks up the inventory and supplies for the holiday season. While the trade report usually has little direct impact on investors, recent trend shows that the U.S. is not moving away from exterior dependence. And this means as supply issue rage on around the world, the U.S. could face some severe problems in the future. There's so much going on and we haven't even got to the last one. Oil price is on the rise. Oil prices just rose above $80 per barrel, hitting the 3-year high. Skyrocketing oil price generally means a dampening of economic growth, lower profit expectations, and a weight on equity price. After all, transportation, shipping, and countless of other businesses operation requires oil, and higher price means higher cost for corporation. So you know what that means, right? That means I gotta stock up on gas before, the prices go high. But what does it mean as far as the stock market? Right now, for the foreseeable future, this is bad on the markets. But does that mean we should sell out and do everything we can and just take our money out the markets and just hold cash? Yes, that's exactly what it means. Well, honestly, I'm speaking for myself. I'm not a financial advisor, so you should never take advice from somebody you see on YouTube. But as for me, what am I doing? I'm just buying the dips. And then some people may say, yeah, you're catching a falling knife. And I understand that, but I'm not going to try to plan the bottom. If I'm down on the positions and I do believe in the company and I've done my research and I still believe in the company's future, maybe 5 to 10 years from now, and I want to hold that company for a long time, then of course I want to buy it at a cheaper price, especially if valuations are coming down. Now, within the past couple of months, we've seen that small caps, well, I've seen that small caps has been taking a huge beat down, and I feel like, hey, you know what, it's some good times for me to buy the dips. Some of these companies, most of the companies I do own are small cap companies that I believe in the future is gonna be so huge. So I'm just buying the dips on those companies. Now, of course, if I didn't do the proper research and I didn't really know anything about the company, then yeah, I wouldn't bet $1 on those companies. But the fact that I did do the research makes me sleep a little bit better at night. So I'm always keeping cash around for any opportunities that I may find when the dips comes. And as long as I believe that I'm buying some good quality companies for the next 5 to 10 years, the short term really doesn't matter for me. And after all, a great quote from Warren Buffett states that you want to be greedy when everybody else is fearful, and you want to be fearful when everybody else is greedy. And since we're on the lines of Warren Buffett quote, another quote states that the stock market is a great tool to take money away from the impatients to the people who are patient. And that's pretty much all I have for you guys today. If you guys enjoyed this video, make sure you guys hit that thumbs up. It's highly appreciated. Make sure you subscribe to the channel. If you haven't already, comment your thoughts down in the comments below. Let me know what are your thoughts about the stock market at its current state right now. Thank you guys so much for watching and have a beautiful day. There's a whole bunch of baloney there. You know what I'm gonna do? I'm gonna take all my money out of the stock market and I'm gonna buy gold and silver with it. Yes, this is exactly what I'm gonna do. That's an Easter egg for those of you guys who know me. 10-year Treasury Yields. 10-year. Well, the first thing could be Treasury Yield. Man, I can't take all this uncertainty. I'm here forgetting my lines because I'm too old to remember what I'm supposed to say for this video. This is the worst wig in my collection. Here we go, come on, push it, buy the dips, buy the dips. That's a Kevin Pathraz joke right there. You know what? I lost a lot of money in the stock market, and it's not necessarily what you think. It's all the potential money. I bought Tesla, I bought Apple, I had called Netflix before, and I had them at a very cheap price. And the fact that I was impatient made me lose a lot of money. If I just held my shares, I lost out on thousands upon thousands of dollars, especially on Tesla. Food for thought.